Hello, my name is Omar Sawaf, and today we're going to talk about investing in Dubai real estate. Now, a little background about myself. I'm a real estate lawyer and broker. I'm also the founder of Direct From Developer. Today's discussion is going to cover three broad topics. We're going to talk about financials. How is Dubai real estate performing? We're going to talk about the law. Can you as a foreign national buy in Dubai? And what vehicle are you going to use for that purchase? And we're going to talk about taxes. What taxes are you going to encounter when you're investing in Dubai? Starting with financials and rental yields, and specifically, rent yields are relatively robust in Dubai. You can achieve up to a 10% gross yield in Dubai. And there's no property taxes or income taxes in Dubai. So there's a relatively thin margin between that gross yield and your after-tax net yield. Where are you going to get that yield? Well, the best yields tend to be in the affordable markets. So you're talking International City, Jumeirah Village Circle, Jumeirah Village Triangle, Dubai Silicon Oasis. Those tend to be the areas where you're going to get the highest yield at the moment. Some of the traditional hotspots, downtown Dubai, Palm Jumeirah, Dubai Marina, the yields are a little lower there. Again, plenty of good reasons to buy real estate in those areas, but the yields tend to be a little bit lower there. In terms of property prices, where's the action? Where's the movement? Prices are down in Dubai over the last year. There was a 7.7% year-over-year reduction in property prices in Dubai in the year ending September 2018, and a 20% decline since the 2014 peaks in Dubai. So prices are down, but it really depends on the location of the property, particularly those areas where there's been a significant amount of influx of new property, new construction and delivery of new property. Those tend to be the areas where there's been the lower drop or the highest decrease in pricing. But again, lower prices oftentimes mean a buying opportunity. No one wants to buy when prices are at the peak. You want to buy when prices are low. And that's really precipitated some action in the property markets right now, in the Dubai property market. People are buying, hoping to buy at lower pricing in anticipation of prices recovering, and then being able to capture that capital appreciation. So what we're seeing in the market is sellers are offering a series of incentives to essentially encourage people to buy in Dubai right now, whether it's lower pricing, extended payment terms on pre-construction property. The government is implemented a series of new initiatives to boost demand for property at the moment. So, whether it's increased number, they introduced a series of residency visas, changes to the corporate laws that are really boosting, encouraging foreign investment into Dubai and encouraging foreign investment, creating jobs, increasing the population, and ultimately boosting demand. Investors we're also seeing are really trying to time the Dubai property recovery. So people are buying pre-construction now in anticipation of a delivery in 2020, 2021, 2022, when the market has recovered and they can capture that capital appreciation with a lower investment now, as they're paying in installments when they buy pre-construction. They don't have to come with all the money at first, can buy in installments and ultimately get delivery in 2020, 2021, 2022, and the property prices have recovered and have gone up. Again, that's a general sentiment or the thinking. In terms of government initiatives, we've talked about this a second ago briefly. The government has introduced a series of initiatives to basically boost demand for property prices in the Emirate. So there's a new 5-year residency visa for property investors, minimum investment of 5 million dirhams or more. There's a 10-year residency visa for property investments and for certain professionals, classes of professionals. There's even an entrepreneurial visa for a minimum investment of 500,000 dirhams. You can get a 5-year residency visa. So they're really trying to allow Dubai to be, people to make Dubai home, commit to living there on a long-term basis, which really increase the population, ultimately have the add-on effect of boosting demand for property. The government has also introduced a change to the corporate law, which I mentioned a second ago. Foreign nationals can now own up to 100% of the shareholding of onshore companies, and they're just enrolling this now. But now, instead of having control rest with a foreign national who owns 51% of your company, and people, weren't necessarily thrilled with that arrangement. Now foreign nationals are going to be able to own up to 100% of the shareholding of onshore companies. And the thinking is that's really going to boost the amount of foreign investment into the Emirate, and ultimately add-on effect of jobs, population, and ultimately demand. In terms of financing, foreign nationals can finance up to 80% of a first purchase in Dubai, 60% of a subsequent purchase, and up to 50% of pre-construction property. So, financing is an option, whether it's conventional, Sharia financing, both are available to foreign nationals. In terms of purchasing costs, foreign nationals are going to pay on pre-construction property a 4% pre-registration fee, 4% assessed against the sale price. You're also going to have a nominal fee payable to your developer, 1,000 dirhams or something, and those are your primary fees on pre-construction property. On completed property, you're going to end up paying a 4% transfer fee to the Dubai Land Department to register title in your name. You're also going to have a registration trustee fee of 2,000 or 4,000 dirhams. That's the party that's going to ultimately conduct the closing for you, the registration trustee. And you're also going to probably pay a broker's fee of about 2% of the purchase price. So it's probably the largest disincentive for people buying completed property as opposed to disincentive for people buying completed property as opposed to pre-construction property is that 2% broker fee. In terms of the law, foreign nationals can own property in the Emirate, and I think we're up to 30 designated areas where foreign nationals can buy property in Dubai, and it's all the hot spots: Palm Jumeirah, Dubai Marina, downtown Dubai, Meydan. Foreign nationals can get registered title in their own name on a freehold basis, and it's total ownership. In terms of residency, we talked about this a second ago. You've got the 10-year and 5-year visas. You've also now got we've also historically had a 2-year Dubai property investor visa. A purchase of 1 million dirhams and more. And there's an income requirement with that as well. But you can get a Dubai residency visa for 2 years and it's renewable. And the government has also introduced a retirement visa, which is available to people who are 55 years and older. And there's also an asset or income requirement associated with that visa as well. So all kinds of opportunities for people that want to make Dubai home, which is a good thing. In terms of method of ownership, most people in my experience buy in their own individual capacity. This is probably because there's minimal local tax concerns in Dubai. There's minimal litigation concerns in Dubai. People don't tend to sue their landlord on slip and fall cases like you see some other places. No comment. Ultimately, people tend to buy in their individual capacity. In terms of companies, people also buy in free zone companies from the Emirate. So DMCC free zone companies, Jebel Ali free zone companies. It costs a couple thousand dirhams to set up these companies, and people do it either for liability concerns. They want to limit their own personal liability, so they'll buy through a company, or they'll be doing it for tax reasons. And it's not Dubai tax reasons. It's oftentimes tax reasons associated with the jurisdiction where they're residing or have their jurisdiction of citizenship. Maybe they're trying to defer taxes by purchasing through a corporate vehicle. As far as foreign companies go, foreign companies cannot own property in Dubai. BVI companies, Cayman Island companies, U.S. companies, Canadian companies cannot own property in the Emirate. And this is so the government can capture that 4% transfer fee that we talked about earlier. In terms of due diligence, on pre-construction property, you're going to want to research the developer. You want to research the project. Does the project have an escrow an escrow account set up for that project? You want to confirm the estimated completion date and the construction status of that project. On completed property, you're going to want to inspect the property, which strangely no one seems to do in Dubai. And you're also going to want to confirm that the seller has title. In terms of the closing is a relatively straightforward process in the UAE. In Dubai specifically, it's going to be conducted by a registration trustee. It's a relatively simple, quick process. You're going to pay 2,000 to 4,000 dirhams for the registration trustee to conduct the closing. You can either attend in person or you can grant power of attorney for someone to close on your behalf, and it's just payment against the title deed. Easy process. In terms of consumer protections, on pre-construction property, the Emirate Dubai has introduced a series of consumer protections to protect consumers of pre-construction property. What the developers have to do now is they have to set up an escrow account for each project they're developing. They have to deposit all sale proceeds into that escrow account, which works to avoid developers diverting funds from one project to another. Sale proceeds have to stay in their escrow account and be used to construct the project. As well, you've got developers have to complete 20% of the project before they can sell pre-construction, or they have to deposit 20% of the estimated cost of construction into the escrow account before they can sell pre-construction property. They have to get design approvals before they start selling pre-construction property, which limits the risk of significant differences between what you think you're buying, the project you thought you were buying, and what's actually delivered. There's limitations on the variation of the size of your unit, and there's also warranties on structural defects for 10 years and lesser defects for 1 year, which are all good things. In terms of remedies, dispute resolution, if you're in dispute as a landlord with a tenant, Dubai has a rental dispute settlement center, so you can always get a remedy there. Historically, landlords have looked for checks as security against tenants. So if a tenant doesn't pay, the landlord would go, doesn't pay. Well, usually what they do is the tenant will supply the landlord post-dated checks, essentially rental payments in installments over the life of the lease. If a check bounced, the landlord would go to the government or the courts and essentially, seek a remedy there because bouncing a check is a crime. So there's been some new legislation in that area, but historically that's been the security landlords have had against tenants. That's changing. You can now go to the settlement center as well to get a remedy there. On the buy side, if you're purchasing property, chances are your sale agreement is going to say any dispute is subject to arbitration. I've drafted these sales agreements and I've arbitrated disputes in the UAE. If you're in the right, you'll end up getting a remedy, but it'll take time. You're better off just, confirming the seller has a history of finishing projects and delivering what they say they're going to deliver and avoiding disputes. But the UAE has, and Dubai specifically, has a pretty robust judicial system, and it was a system I'd feel comfortable with. In terms of red flags, Dubai has minimal title risk issues historically, minimal currency risk issues. The dirham's pegged to the dollar. Regulatory risk isn't a major issue. Judicial risk, in my experience, isn't a major issue as well. It might take time, again, as I mentioned a second ago, to remedy, but if you're in the right, generally you end up getting to a remedy one way or the other. Supply-demand risk, I'd say, is the biggest issue in Dubai. There's a lot of new construction going on in Dubai, as anyone knows who's been through the Emirate. And sometimes the new supply can tinker with the supply-demand equilibrium. So it's something to consider. Is there new supply coming online in the area where you're looking to purchase? In terms of taxes, we had that 4% transfer fee, pre-registration fee we talked about earlier. Pre-registration on new construction, transfer fee on completed property, it's 4% assessed against the purchase price or the sale price. Apart from that transfer fee, Dubai doesn't tax rental income. It doesn't tax capital gains when you sell property, and there's no estate tax in Dubai. So that's probably the best feature about Dubai, and probably why Dubai is so attractive for investment. The only tax issues really that are going to arise are tax issues that are going to arise from your jurisdiction of citizenship or residency. But again, Dubai, minimal tax concerns when you're investing in Dubai, which is a good thing. There is a value-added tax that was introduced into the UAE in 2018. It's 5%, and it touches on services, goods that you buy in Dubai. Doesn't really touch on rental property. So you buy residential property in the Emirate, rental income is not subject to this VAT tax. Neither is the sale or purchase of pre-construction property that's sold within 3 years of completion. Neither does it apply to the sales of completed property. So the VAT tax, the new tax, isn't going to apply to you really, isn't going to touch on you. It just mention it for completeness. The only time you would ever encounter it is if you bought completed property. You had to pay a 2%, which we mentioned before, 2% brokerage fee to your broker. Maybe that 5% VAT tax would be assessed against that 2% brokerage fee you pay. But apart from that, VAT isn't really going to concern you. And that's it. If you have any questions, you can always reach out to me at omar@directfromdeveloper.com. You can always reach out to me at our corporate headquarters if you have any questions as well. And check out our YouTube channel if you're interested in investing in other jurisdictions. And that's it. Thank you so much. I hope you learned something, and we'll talk to you again soon. Thank you.